is with us. Abhiram, thanks for waiting. Just a quick word on the market first. Do you think we've seen the lows and this is now going to look a lot better? The general consensus out there is it's going to be fairly volatile, so it's not one way. But what's your sense?
You're right. I think it's a volatile environment. And the truth is that the picture is changing on a daily basis now. And I expect that will probably continue at least for another month or so until the dust settles on various aspects, not the least the new one that's about tariffs. So my thinking about the market is that from March onwards, you could form some kind of a durable bottom and end the year with maybe high single-digit returns, which is what we had for the large caps last year, to be honest. So a nifty target of 25,500 is where we see it from here.
Good afternoon and good to see you in. Abhiram, if I remember correctly, on the consumer staples, that wasn't a sector that, that you like too much, if I remember correctly. But now suddenly there is this bit of this consumption boost that's come about. So how are you playing the consumption theme? If you could give us a sense on that.
Let's kind of break down the budget situation a little bit here. So what we have is, as per budget documents, $11 billion odd consumption boost. But if you break it down and think it's really going into the affluent consumer, mostly the urban consumer, and you got to see what kind of products or services they will consume. And I doubt it's still going to be staples. You could upgrade the staples item that you buy, but I think the incremental spending will more likely go into first a little bit of savings. So that should be beneficial for AMCs, insurance companies, those kind of things. The second could go into a bit more discretionary purchase. So the long pending surgery, for example, getting your tests done. So that means a little bit of healthcare and pharma. And the third bit is discretionary, which means four-wheelers, maybe home improvement, all the additional things which are not extremely large ticket, but certainly not staples. So somewhere in between is where I think the biggest beneficiaries lie. And I do not think that our view on staples is dramatically going to change as a result of this.
Abhiram, hi, afternoon. Rima here. You liked the EMS space, electronic manufacturing companies, and some of them, like Keynes, had a very sharp negative reaction to their numbers. So what have you made of the Q3 numbers that we've seen so far from the EMS companies? And have you changed your assessment? Maybe you think the stocks have run up too much and therefore there is a case for a little bit of profit booking, valuations have run up. So talk to us how you feel about the EMS companies.
I mean, there's no doubt that valuations have run up. The stocks were very strong performers for the past year or so. But if you take a look at the large EMS companies, I think the results, at least for a couple of them, were quite good. What's more encouraging is that most of them continue to report 30, 40, 50% revenue and earnings growth, which is quite scarce. And therefore, the view having a long-term positive bias towards the space absolutely remains. I think this theme is still is quite structural. That doesn't change. Now, the truth is that the market has corrected quite a bit. So you already have maybe small caps correcting 15, 20% from their peaks. It is quite natural that companies that have run up a lot will correct. But the positive view is still very much intact. The drivers, frankly, are intact.
Okay. Also, I'm looking at Thermax, just pointing out that in the base quarter, they had an exceptional item. There was a gain of 126 crores from sale of property, which obviously is not there this time around. So that's another sort of reason that would have gone into how the bottom line is looking. I mean, year on year, if you're comparing, it's looking quite low. 200 crores versus about roughly 100 crores. That's Thermax. But otherwise, the numbers are being received quite okay, at least for the time being, by the market. But must say that the growth is not really blowing away the rooftops in the third quarter. Again, year-on-year comparison, it's all right. Mostly, I think it seems to be single digits for most of their businesses. Abhiram, hi. Good afternoon. Good to have you on the show. Since I'm talking about Thermax, let's actually, bring you in on this because ever since the budget, everyone's trying to figure out. Actually, even before the budget, people had started booking profits in this side of the market, right? In capex, capital goods, etc. Now, how are you positioned? Do you think valuations have become a bit more reasonable? Would you add them back to the portfolio, or what's the stance?
Well, I'll give a slightly macro answer and then kind of address the question you posed. So, it's rare that unless you have a calamitous situation that the market corrects 15-20%. And if you see where small caps have gone, maybe 15% already from their peak, maybe closer to 20 to be honest, that to me suggests that it's about time to start doing your homework on which leg to buy next. Now, looking at capex, actually, I'm not all that bearish about it. There's a couple of ways to think about it. First and foremost, what the government has probably realized over the course of the budget exercise is that you can only spend that much in a particular year. And last year's situation tells us that they couldn't actually spend all that they budgeted. And therefore, while the market took the capex growth number to be quite weak, I think that it's quite practical. The issue, though, now is that the rotation within capex is happening. So what you're seeing is more towards power and metro, for example. And I also think one more thing, which is that if the government is to achieve its 2025 budgeted number also, it means a significant spending in the fourth quarter. What that tells me is we are pretty close to a capex bottom. And this is about the time to start doing work on companies in the space. And as I mentioned, power is one, metro is another, renewables probably as a long-term theme anyway, to do a little bit more on all of these areas.
Okay, all right. No, I think that's a fairly good point that you make there. By the way, Abhiram, on Friday, right? I mean, you'll get this easing from the RBI. Is your team on the expecting anything more apart from a 25 basis point cut?
Well, we do think that the conditions are ripe for a 25 basis point cut. I also suspect there'll be a little more to add about the liquidity measures, maybe something about CRR and so on, because we have seen the RBI kind of change its stance a little bit towards easing the liquidity situation. So I think both of them could happen. Now, there's a bit of an issue in this, which is that in the meantime, we've had the Trump tariffs come through. And I'm not sure if that's a cue from a global perspective, because it does suggest that the Fed may hold through the rest of the year. That said, I think the conditions are ripe for a 25 basis point cut.
Thank you, Abhiram, for joining in. The countermeasures from China come into effect only from the 10th of February, which leaves about a 6-day window for further negotiations if a deal could be struck between China and US. That's the hope that is alive right now. But let's talk about the defense.